Welcome back. We're doing Lab 7.4, question number 2. And we're recording some entries, some journal entries for accounts receivable and the allowance for doubtful accounts and bad debt expense. So we are supposed to use the letter of the transaction as the description. The dates are in normal format. The company began operations on January the 1st, 2013, so there aren't any opening balances in accounts receivable or the allowance. It says that these T accounts that we see here on the right hand side are just for our calculations. They will not be marked. So if you were doing this on an exam, you might want to save some time and not fill those out, but we'll use them to show how the balances change as a result of each of the transactions. So we have 4 transactions. The first one, March the 5th. We sold some merchandise for Bentley for $1 million. Oops, we want accounts receivable for $1,104,000. The amount of the sale. That's because it says we sold them under credit terms of net 30. There's no discounts. We don't have to worry about that. The other side of the entry, of course, is sales for the same amount. We are using a perpetual inventory system, which means that every time we make a transaction with inventory, we need to actually make that entry to inventory. So this one is making inventory go down. And of course, the other half of that entry is cost of goods sold. And it's for the amount of $864,000 because that's what it tells us right here. The merchandise had cost $864,000. Okay, that's transaction A, all done. Now the accounts receivable goes up by $1104. We'll put that in there. Then on the 28th of August, we decided we were going to write off some of that. It says $24,000 of uncollectible accounts receivable written off. The entry to record that is debit the allowance and credit accounts receivable. Apparently we only have one customer, so we can't stop selling them to them, but they're going to short us by this $22,000. Okay, so that's transaction B. That is going to reduce our accounts receivable and our allowance for doubtful accounts. So this part reduces our allowance for doubtful accounts. This part reduces our accounts receivable. Okay, let's move up a little bit. December the 14th, they paid us. And they didn't quite make the intended credit terms of net 30. But they did pay us, so we got some cash. Not a lot of cash, $280,000. Well, I guess $280,000 is a lot of cash for me. But when they owe us $1 million, that's a little light. But we debit cash and record the reduction in accounts receivable. And of course, that's transaction C. And that is going to reduce our accounts receivable. If I can get it to rank over there. There we go. Then finally, December 31st, while accounts are being adjusted, it was concluded that 1.5% of the outstanding accounts receivable would become uncollectible, which begs the question, of course, what is the outstanding accounts receivable? It's going to be the $1,104,000 minus the $22,000 minus $280,000, $802,000. Something seems a little bit. Well, I'm not sure why I did 22 here. 22,000 should be 24,000 for that entry. Okay. So 24,000. Let's correct these pieces here. That one should be 24. Oops. This one should also be 24. That'll make a little difference. Okay, so let's redo this calculation. Instead of the 22, we're going to put it in 24. All right, so the 800,000 is 1,104,000 minus 24,000 minus 280,000. So that is the balance in accounts receivable. So our target balance down here is 1.5% of 800,000, or 12,000. In order to get there, we have a debit balance of 24,000. So we need to make an entry to get rid of that 24,000 and add another 12,000 to make the balance equal to our target balance. So $36,000 is the amount of the bad debt expense. And of course, the other side of that entry is the allowance. Right there. This transaction was the 31st of December. Transaction D. Okay, so let's carry forward those carry forward balances. The 800,000 goes over here. The 12,000 goes over here. And then I scroll up. February the 27th, Southgate sold more merchandise to Bentley. So we can just drag the same items down here, if you like. Only room. Okay. And that is the 27th of February that happened. Okay, the amount of the sale this time is 1,102,000. And the cost of goods sold is 864,000, which is actually the same. So I suppose we could have dragged that down already from the top as well. Okay, so what does that do to our accounts receivable? It increases it by 1,102,000. Transaction B, August 26th. We decided 22,000 were uncollectible, so we're going to write those off. The allowance goes down for 22,000, and it is actually 22,000 this time. I'm not just reading that wrong. It actually says 22,000. The allowance for doubtful accounts gets debited. The accounts receivable for Bentley gets credited 22,000. So that reduces my accounts receivable. And okay, stay over there, please. And reduces the allowance as well. That being transaction B. Transaction C on the 27th of November, which was not long ago in the time I'm doing this video. It was actually Friday, and today is Sunday. 27th of November, we received cash for 270 grand. Of course, that cash was in payment of our accounts receivable, so the accounts receivable goes down. Transaction letter C. Then at the end of the year, we have one more transaction to do. Transaction D. Here we need to figure out what the allowance for doubtful accounts entry will be. And in order to do that, we need to note 1.5% of the outstanding accounts receivable will be collectible. So we're going to need to figure out what the outstanding accounts receivable actually is. So we've got 800,000 opening balance. We added 1102. And then we subtracted 22,000 for a write-off, and then we subtracted 270,000. So 1,610,000. And of course 1.5% of that is the amount of the allowance for doubtful accounts. $24,150. Now that's the target balance. That's what we need to have in the allowance for doubtful accounts. But that doesn't tell us how we get there. We need to make an adjustment, which is going to give us 24,150. But we already have 12,000 set up. That's this amount here, carried forward from the previous year. But we also have to recover the 22,000, underestimate the amount written off of the previous year's allowance. So that gives us an entry of 34,150. Of course, that entry is to debit the bad debt expense and credit the allowance for that same amount of 34,150. And that's all there is to it. So let's see what Lyrics thought of all of our work. Lyrics liked it all. We are done.